Today I'm going to show you how to pick an investment in this wide world of investment choices. And I'm actually going to walk you through an investment x-ray. This is the exact framework that I learned from one of my billionaire clients when I was a banker at Goldman Sachs. Hey, if you're new to the channel, my name is Sharran. As I shared, in my past life, I was a banker on Wall Street at Goldman Sachs and at Credit Suisse. I've helped both manage money for billionaires, as well as in the last 15 years, 20 years, I've had a chance to build and grow and sell 5+ businesses. And I also helped run a publicly traded business on the NASDAQ. So I consider myself a professional investor, even though I'm a random handsome guy on YouTube. I'm going to give you the exact formula that I learned that I've taught to so many people, including the best influencers in the world on this investment x-ray. And it has 4 big pieces to the puzzle. If you learn this process, you can do it in your head. Whenever you're pitched an investment, whenever you're pitched an idea, maybe your friend says, hey, get into this real estate deal, or you think you need to buy Apple, or you need to buy Bitcoin. How do you make a decision in this process? So I just want to give you a framework for how you can make a decision. And I'll take you through a quick thinking process. That way you're not making it based on emotion, and you're actually making it based on understanding a few key pieces that gives you a starting point on how you can ask better questions in this process while processing and thinking about an investment overall. So there are 4 parts when I filter this process, and I call this the investment x-ray, right? You're doing an x-ray of this investment. The first part is you're asking, hey, what is the degree in which this preserves capital? So if I put in $100, over time, what is the probability that I get $0 back? Now, welcome to the game of investing. This can work for any investment, but if you invest in US Treasuries right now, meaning you buy a US Treasury bond or a Treasury bill, the chances of it going to 0 could exist. However, we would say, that's probably unlikely. But if you put money in Bitcoin, the chances of it going to 0 are higher than that of the US Treasury. I'm not saying it's more or less, but you understand now what is the capital preservation component around this. So that's the question you're asking. The second idea here is, if number 1 was capital preservation, the second idea is tax efficiency. So is there a tax efficiency component in this process? So you're asking the question. So if your friend Jimmy was pitching you a real estate investment, you would say, hey, what are the tax consequences of this? And sometimes it's nothing. So there's no tax consequences. Sometimes you get some kind of hybrid efficiency, but it may actually be considered aggressive, right? Oil, natural gas, all of that, if it's not done well. And sometimes the tax benefits are really clear. For example, if you're putting money in a 401k or an IRA or whatever, a lot of you have talked about that. I'm not a big fan of it. However, because it locks up your capital for 30+ years, and I'm just not a fan of it. However, there are some tax benefits that are clear and established because it goes in tax-free, but when you come out, you pay taxes probably at a higher rate. So there's a tax efficiency component there. So that's number 2. Here's number 3, which is cash flow. I like to call this yield. All this means is, think about it from a perspective of, let's say you own I'm going to call this is an orchard. Let's say you own an apple orchard, right? And the apple orchard has apples. The yield is the apples from the apple orchard. The yield is what you get from the investment over time without losing the investment itself. That's the yield. This in some ways is our dividend paying stocks. This in some way is passive income from rent in a real estate investment. This in some ways could be interest payments on a loan that you make. What is the yield or the cash flow associated with it, right? So that's a component. And the last part is, does this actually grow? And some grow and some don't grow. For example, if you took the United States Treasury, right, and you invested $1,000 in the United States Treasury, well, you may get paid a 4% interest rate. And at the end of this, you get your $1,000 back. The growth there is 0. And that's okay, right? But you know that the growth is 0. However, if you buy Apple stock and you say you bought Apple stock in 1980, right? And today, compared to today, it's probably here, and you made some good money. Now, Is it speculation? Probably. If you're not an active investor and don't know about Apple, you could have like missed the dips and all of that. But you asked the question about growth. So I want to really kind of ensure that you understand this. The reason I'm suggesting this to you is not so you can evaluate this in your head, but you ask the right questions of the investment, the person pitching you the investment. So let's say Jimmy, your friend, was pitching you a Bitcoin investment. The first question you ask is, hey, let's talk about capital preservation. Give me all the ways in which this could go to zero. Give me all the ways in which I could lose my money. Give me all the risks around what could potentially happen where this goes to zero. Give me all. So now you are asking a very thoughtful question. So you have a structured way of asking questions around this, right? Second, now you can say, hey, give me some, like walk me through the tax advantages or the disadvantages, the efficiency around it. How is this investment taxed? Now that person, Jimmy, pitching you this investment is now has to break down for you, or either it has no tax benefits or some kind of aggressive tax benefits, or it has clear tax benefits in the IRS tax code. Whenever you ask for this, by the way, I always like to say, hey, can you point me to the IRS tax code associated with this? By the way, for folks that are watching this that are not inside the United States, it still works. You probably just need your country's tax code here. That is the only thing that changes. So the only thing that changes for you from an international perspective, that is if you're not in the US, the tax efficiency component changes overall. The third is the yield. Yield is cash flow. So you're asking the question, so all right, Jimmy, if I held this investment for 5 years, do I have any cash flow associated with it? What is the yield of this investment? When can I expect it? Is it quarterly? How do I know it's paid? Is it going to get, is it guaranteed? Is it not guaranteed? Does it change? Does it not change? Is it fixed? Is it variable? What is it actually based on? So now you can ask better questions around this investment because you're actually doing an X-ray. And last but not least, the growth component is hard because everyone promises it. What I like to ask for is, hey, can you give me your financial model on what growth you're projecting? And can you give me a conservative case? Can you give me a kind of a base case? And can you give me an aggressive case? So now I actually get to see now when they give me those three cases, I still have to put my conservatism investor hat on and be like, hey, if I'm a professional investor, how do I size this investment overall? So it gives me a chance to understand what that is. The reason I'm sharing this with you is it gives you a chance to ask better questions. Right? So you may say, Sharran, all right, I understand this overall. How do I utilize this in a very thoughtful way? So I'm going to go to a green color here. I like to think about this X-ray as a score of 100. And my job here is I like to give myself a subjective score on each category. So for example, let's just say we're working with a cash investment. Literally, it's cash in your mattress. Okay? Cash in your mattress or in your bank account. So let's ask the first question, capital preservation. It's cash in your bank account. What score would you give it? And I like to give each box a score of 25. So out of this, I would give cash a 25 score because, in a year, I'm still going to have that cash in my bank account, right? The tax efficiency on the cash, I'm going to give it a score of 0 because I don't get any efficiency around it. I may get some yield around it. Maybe it's in a interest-bearing account. So sure, maybe I'm getting like 1% interest or something like that. All right, so I'll give this a score of 10. I'm making this up, right? Out of 25. So 10 out of 25, 25 out of 25, 0 out of 25, and the growth is 0. So 0 out of 25. So now, at least in my head, I'm like, all right, so the value of this cash-based investment is 25 plus 10 plus 0 plus 0. So I'm giving it a score of 35 out of 100. So now in my brain, I've kind of given it some kind of score to work with. So the main reason for having the X-ray is a 3-part reason. One, it gives you a chance to think about think about it and put it through a process so that you don't have to react emotionally. Number 2, is it gives you a chance to ask better questions of the person that's pitching you the investment, or Google better questions, or ChatGPT or AI better questions so you can understand this. And number 3, it gives you a starting point of a score that you can start to rank and rate and stack rank these investments overall. So let's actually get to the second part of the puzzle, which is let's do it for an investment. So let's say, and I'll take you through this process just so you can see how I would do this in my head. In the same exact way, it's a score of 100 total, right? And I want to give each of these capital preservation, tax efficiency, yield, and growth, 25 points each, and see where they all land. And I'll show you the key part in thinking about this. And this is exactly how I do it as a starting point of, this is my first pass of evaluating an investment overall. All right. So let's say the first investment is cash. that we just did. Second, let's say I'll actually make this easier and make this more fun. Let's say the first investment is Bitcoin. Let's say the second investment is Apple stock. And let's say the third investment is multifamily real estate, which is my favorite, right? So it's real estate, right? And so let's go through each one. I think that will be really fun. So capital preservation in Bitcoin. Now, does Bitcoin preserve capital? I don't know. Many of you would agree or disagree. So if I was like, hey, I don't know, maybe this is out of 25, maybe this is a 10. Because anything can happen based on what you're looking for. The tax efficiency around it is not much unless you do staking and you do tax loss harvesting, etc. The direct holding tax efficiency, there is not much in Bitcoin that I know of. So I'm going to give this a score of 0. There's nothing that I can really do. The cash flow associated with it is, I think you may get some staking revenue if you do something. All right, I'll say if you do something with it, maybe you get something out of it. So I'll give a cash flow of 5. The growth, let's just say you are so bullish on Bitcoin that you think it's digital gold and you're going to hold it for 25 years and you're going to hand it to your children. Great. So great. Let's give it the full score. Let's give it the full score of 25. So now I'm going to total it up, which is 10 plus 5, 15. 15 plus 25, 40, right? So now I'm going to give this the score of 40, that's my total score. Now, I'll get a liquidity column in a second. So let's actually do Apple. I'm going to change my colors just for visual graphics sake. So let's say Apple is a stock that's traded on, I think on the NASDAQ. What is the capital preservation component of Apple? So maybe you'll Google it over time. Maybe you'll see whether Apple has lost money. So it definitely can't be 100%. So maybe I'll say, hey, over time, Apple is probably 20 out of 25, right? So as you know, each of these are on a scale of 25 because it totals to 100, right? That's what we're doing. And then the tax efficiency of Apple. Well, I don't get really any tax efficiency because I'm just holding a stock. So I'm going to say 0 on the tax efficiency. The cash flow component associated with this is I might get some dividends, so probably a 5, but not a lot, so probably a 5. And the growth, well, if you're going to give Bitcoin 25, you at least got to give Apple somewhere close to that. So I'm going to give Apple call it a 20 on the growth. So now this is a 20, 20, and a 5. So I give it a score of 45, right? Interesting how that shows up, right? Let me give you the third one, which is real estate. So multifamily real estate is investing in apartment complexes. That is the primary thing that I do. I like to invest in companies and apartment complexes. We own thousands of units in the United States. So let's say the capital preservation. Well, it's hard to say. Apartment complexes never gone to 0. So I'll give it, because you have insurance and things like that. It'd be crazy to lose the investment. But so let's see, it's a hard real asset. So I'm just going to say capital preservation 0. Worst case scenario, I can hold it to get my money back. Second, the tax efficiency. The tax efficiency is actually pretty good because you get depreciation associated with all of this. Now, it's not perfect, but it totally works if you're a real estate professional. So I'm going to give the tax efficiency score 15 here. So 20, that's 40 already. I already get cash flow from it. So I get cash flow from these properties. So I'm going to give, I don't know how you would do it, but I actually get pretty good cash flow from it. I'm going to give it a 20 on a scale of 25. It's not perfect, but I still get it. And the growth. Well, if I increase the value of the property and it actually grows, it's pretty good. So now I won't say perfect, but all the exits that we've had has been really good. So I'm going to give it a score of 20 on the growth. Now, you may say, well, Sharran, that's aggressive. All right, I'll give it a score of 15 because it can't have the same growth as Apple, right? So let's actually do some math. So this would be 35, 45, 50, 75, right? I think my math is right. So that's very interesting if you think about this, right? So now I have some kind of thinking process on how it actually is graded. Now, you may rate these differently. This is just your personal rating, right? That's all it is. I'm probably going to score it differently than you're going to score it. I'm not telling you this is how to score it, but you may score it differently. By the way, please know this. I'm just a random handsome guy on YouTube, right? And you should get your own advisor in this process. I'm just walking you through the investment x-ray. This is what I learned from one of my billionaire clients when I was at Goldman Sachs, and I actually put it into a process that I can actually teach to you and teach to myself and teach to my family. This is exactly what I teach my kids. This is exactly what I've taught several big influencers who have shared this with the world, which I'm totally cool with because I think this information needs to be out there for free so that people can have a thinking process of making great decisions. So what is the liquidity component? So liquidity just to me means, is my capital easily accessible, right? Can I get it right away? So I'm just going to go with a high, medium, and low. So here's how Bitcoin liquidity is pretty high. so I can go and get it immediately and trade it and convert it to cash. Apple liquidity is high. I can go sell the Apple stock, forget the tax issues around it. Real estate, it's kind of like medium to low because the deals we invest in have a 3 to 5 year hold period. So in that period, I can't actually access it. I'm locked up in that period. So now you can be like, hey, if I'm not worried about this investment being locked up, can I keep it? But otherwise, these two have to get a little bit of a premium. So even though these are 40 and 45, and this is much higher, you know what you're getting there? You're getting what I call a liquidity premium because you're locking up capital and you're actually be able to do something with that. That's a really, really powerful thing. And the reason I'm sharing all this with you is for you to actually be able to ask, mainly to ask better questions, because when we all get pitched a deal, we don't know how to ask it and we emotionally react. We say, oh, it's my friend, I want to support him. Oh, I think Bitcoin's going to go up. Oh, I think Apple's going to go up. I heard in the news a news story that Nvidia is undervalued, and we make like emotional decisions, and I do too. But I always try to come back to the X-ray. I always try to ask myself, okay, where do I sit? Where do I stand? And it gives me a path to asking better questions and having a better answer overall. So in this entire process, what I want to tell you is I want to explain this one thing to you. The world has made us believe that um, money doesn't buy happiness. And I kind of broadly agree with that because you can't go buy happiness off the shelf at Target. I understand that. However, I know several people right now who, if they had more cash, more liquidity, and made more income, they could have significantly better lives. They could pay off debt, send their kids to college, pay for medical expenses, go on a vacation that they have not gone on for a while, buy a better car or replace the car, help their family, help their friends, donate to their local, dog shelters, and be a better citizen of the community. I actually believe that making money has been, bastardized by society, and I think it's a good thing if you just reframe your contract with yourself. So I'm actually a big fan of creating value in the world to make money, especially when your money makes money from an investment perspective. So I want to go back to, I want to finish up by giving you these 6 words that I tell myself, I tell my family, I tell my friends, and I tell everybody that I can know is this. The 6 words that will guide you for having a good life is work hard, be kind, and of course, make money, and not just any money, make more money. Hey, I hope that was helpful to you. Remember, I'm a random handsome guy on YouTube, and hopefully this is helpful to you and allows you to have an X-ray into the next investment that you make. But in the meantime, work hard, be kind, and make more money.